walking into like an answering machine and having the blinking light and it says 10 and you're like, oh my God, I got to listen to 10 messages.
Yeah.
Hi, Sean. This is Mr. Johnson. Could you call me today about my insurance policy, please? Toodaloo. Next message.
Yeah, it was kind of like that.
Welcome to the podcast dedicated to real estate, insurance, and building your business. Join us as we take you along our own business building journeys with additional wisdom from our network of local and national experts. Welcome to Bricks and Risk. Hey everyone, this is Tim, your favorite Bricks and Risk co-host. But don't tell Sean. I hope you're enjoying this episode, and I'll get right back to it in a moment. Our audience grows through word of mouth, so if you would please take a moment of your time and give us a review on the platform you're on, that would be fantastic. Please also help spread the B&R word by sharing your favorite episode with a friend. We greatly appreciate your time and trust. Now, back to the show. Hey everyone, welcome to another episode of Bricks and Risk. I'm Timmy.
And I am Tim's co-host, Sean Mooney, Moonee.
Do you know what's funny? When I was younger and growing up, because I grew up in a household with 3 siblings, so there's 4 of us running around.
Right.
You had to label stuff.
Oh, yeah.
Because you had to remember like who's
Sure.
was what. You had to write your names on things.
Right.
I wrote Timmy G with a period after the G on everything that I owned as to not confuse it with Pat or Ryan or Mary Beth. Fun fact.
There you go.
There you go.
Now you know.
Now you know, everyone. All right. What are we getting into today?
Today, we're going to talk about insurance. Our topic today is going to stem from a post that I picked up online somewhere.
On which social platform did you find that one?
Facebook.
Yeah.
Facebook.
My favorite.
But it was hard lessons from an insurance client retention standpoint, and how this one particular agent was really struggling with handling retention within his agency.
All right, so we've talked to the audience before about our nothing doc.
Oh yeah.
Nothing divided by nothing equals nothing.
If you listen to like 2 or 3 episodes by now, you'd fully understand what the nothing. Oh, we'll bring it up and we'll scroll the video.
Oh yeah, we will. We'll give something to Tara.
Yeah.
So he can flip through it.
Oh, that'll be good.
So like just as like Mooney is as interesting he is with his outfits, he's also equally as interesting with his nothing doc. Because it just has all this stuff. It's got like text, it's got hyperlinks, it's got these big pictures, it's got screenshots, it's like all this stuff.
Sometimes it's just that. Sometimes it's my comments that will layer on the actual link or doc.
Do you know what it's like? It's like the bedroom closet from the movie Uncle Buck, where he's packing to go see the kids, and he opens the closet and all the stuff flies out, and then the bowling ball falls and smashes him on the head.
Yeah.
That's what your nothing doc is like. So I have to like go in very carefully to like decipher
You have
it.
to brace yourself.
You do. Like I have to be like, oh man, this is going to take me 15 minutes to even just learn how to read it.
Some crypto stuff in there. Social media stuff in there.
So when we chose this one, I think as much as it stood out to you, like seeing it on Facebook, what stood out to me was the fact that what this agency owner was saying. So basically, guy or girl, I can't even remember, what he was saying was he'd been in the business for about 2 years. He has somewhere around 800 clients, which sounds pretty good.
It's good.
And in that 2-year period of getting the 800 clients, he started losing 50 a month.
Yeah.
But to counteract that, he was saying, I'm losing 50, but I'm also gaining another 50. So he almost hit like a plateau of 800, and then he'd lose 50, he gained 50. He lose 50,
Month by
he
month.
gains. So
Yeah.
he's never growing from 800. So I wanted to kind of like, obviously, toss this one over you. This is insurance. This isn't real estate. But I want
But
to
I
get
think it does lend itself just to the overall idea of how you operate the business, and maybe not specifically from a retention standpoint,
okay.
but from a real estate standpoint or any other type of business industry, is how can you conduct business that's going to maybe keep clients, get repeat clients, or get referrals from those clients. So I think it's kind of, it washes into those other industries, but for our purposes, we kind of like lay it out just from the insurance standpoint.
All right. So here's a question.
Yep.
Would you say in your experience that it's normal to hit some kind of number, whether it's 500 clients, 1,000, 10,000, doesn't matter,
Right.
to just get to kind of like a plateau or a ceiling and just start losing people, filling the gap, losing people, filling the gap? Like, have you seen this in your business where you kind of reach like the mountaintop and it's hard to like keep going?
Yeah, because there's different factors that kind of force your hand when it's the insurance agency and how this occurs.
Okay.
And so one might just be staffing, right? So you start an agency, you hire 2 salespeople, and you don't hire a service person inside of your agency.
So there's no support. Like
Right.
people are slinging deals.
Yep.
But there's no one to support them once they
Yep.
come in.
And so you start your agency, well, I need to grow. I want to grow fast. I want to get this thing off the ground. I want to get going. I want to grow this agency. So going in with that mindset is fine. And so one of the shortcomings where you might hit that plateau is because you have 2 salespeople, how much can you possibly sell in a year, 2 years, 3 years, right? And then insurance is a retention game. So in order to have good retention, you need to be able to service those existing clients.
Yeah. So it's like, it sounds like they were falling into the trap of let's grow this thing like really fast. Like you said, 800 in 2
good
years
number.
sounds
a lot.
pretty good.
Yeah.
But if all you're doing is spending your time on getting new clients, that means there's less time to focus on retaining clients.
Yep.
And I think if all you're doing is looking to grow, like they said, they're losing 50,
Yeah.
but they're gaining 50. They're selling. They're selling all the time. They're meeting new people.
Yeah.
And the example in it sounds like it said it was 100% online.
Yep.
And what I gather from that, it's probably more like cold lead generation, like not so much relationship.
Yeah. Buying leads,
Yeah.
running ads,
Exactly.
that sort of thing.
Yep. So one was, is that a normal thing? It sounds like, yeah. It sounds like they went pretty fast, but it sounds like they're missing the element of support so that they're not losing 50 a month.
Yeah, and that could be one kind of angle that may be causing that. The other might be that they put all of their business with one carrier that's super hot right now, and then they maybe the underwriting guidelines are not that strict.
Oh,
So
interesting.
they're allowed to right. So they got good rate, and you can get a lot of deals through to issue coverage for that maybe some other carriers wouldn't. But then you gotta at some point pay for that. And so by way of increased rates. So let's say, you're putting 75% with that one carrier and they take a huge rate increase.
Right.
Well,
Because all the carriers are different.
right. So now your main horse, just took rate of, 18% or 22%, and you're just focused on selling, and maybe you don't have other carriers that can compete. Maybe there's just by way of rate, some attrition there where people are leaving your agency because you sold them on price, right? So
So that's a factor. Like an uncontrollable aspect of the market
Yeah.
could be because you, like you said, you herded all of them into this one carrier. Let's say you got 10,
Yep.
but this one carrier has 75% of the business. If
Yeah.
they increase their numbers, people are going to jet.
Yep.
A lot of people.
Yeah. Well, especially like cold leads, right? You're getting the cold lead. You're winning their business because you were $6 less than their current carrier, right? So now that it renews, now you're $6 more. John Skippy-Doo is out the door.
John Skippy-Doo. Okay. Like that name.
So staffing could be one. Rate could be another thing. Maybe a couple other different factors that kind of play into that. But those being the main two.
What are your thoughts on like marketing? So one of the things they had said is that it came 100% online, which I would attribute more to like cold lead generation. You're just putting Facebook ads or, you're just like, spending money on websites that feed you names and numbers and making cold calls or sending cold emails or text messages or whatever.
Yeah.
Like you're talking to people you don't know.
Right.
So if you're talking to people you don't know, like explain like that method of growth versus yours being a little bit more relationship based, word of mouth, referral.
Yep.
How do you think that's playing into his scenario here because he doesn't have that relationship?
Yeah, 100%. Yeah. So my model is a much slower. We're not going to write 800 new clients in 2 years.
Right.
We don't. I don't want to. It's not a desire of mine. If I could get 800 of the clients that I like and get them in that little target zone, that'd be great. But all the things that come with it. So yes, that person is definitely, spending the money to bring the clients in. And there's a direct relationship of people leaving because it's the cold internet lead. It's not going to be people that stick around. They're not psychologically. They're not buying insurance from us because we are the trusted advisor. That's just a different relationship, and so they're probably more inclined to leave if the rate goes up or you're not getting the service. They'll be gone.
All right, here's a good question. In your State Farm and Allstate days, where other people were running the agencies and you were like a salesperson at the agency, were they doing similar methods to grow their business? Was it a lot of online lead gen? Was it mailers? Like how in the offices that you've worked at previously to your own, were they running those marketing methods?
Yeah, so Allstate was more relationship driven, I would say.
Okay.
So it was a lot of,
it was like, this is the brokerage that I want to lead. I'm okay with the Allstate brand, but I'm going to build my agency off of relationships.
Yeah.
So you got to watch that.
And then State Farm, I would say, was more like a heavy dose of, at that time, like direct mail and different marketing campaigns like that.
Like almost like walking into like an answering machine and having the blinking light and it says 10 and you're like, oh my God, I got to listen to 10 messages.
Yeah.
Hi, Sean. This is Mr. Johnson. Could you call me today about my insurance policy, please? Toodaloo. Next message.
Yeah, it was kind of like that. And like 17 faxes that,
we're going back in time on that one.
Fax machines where they would just pile up on the fax machine when you walked in on a Monday morning. Stuff like that.
All right, so let's compare State Farm to Allstate. You worked at those two agencies.
But it's not like by, each agency owner picks and chooses what they want to do.
State Farm was more cold. Allstate was more warm because that's what the owners led with.
Well, also too is like if you get a period where some of these carriers will just run hot with like hot rate, take rate decrease because they want market share, different things. So when you have a period where you've got a really good carrier with a really good rate, you're more inclined to spend more money on different advertising vehicles
Because you can beat people.
because your close
you can beat their
ratio,
numbers.
your close ratio is going to be much higher.
Wow.
So your dollar spend is going to be much more efficient if your close ratio is higher.
When you were at Allstate and they were building it a little bit more through relationships,
Mm-hmm.
did they have a high, let's call it retention rate, or did they have a high fallout rate? It was a lot of retention.
Yeah, and then we measure them, So I would think that although there was a period of time where it was like they took some heavy rate like back to back, like where it was like rate, and then 6 months later was more heavy rate, and so there would be periods where you would see much higher, but on average, I would say we probably ran that at 85% retention.
Oh, wow.
Is my guess, something like that. And then 80, 90,
Gotcha.
something in that range.
Talk about Mooney Insurance Brokers.
Yep.
How is it today? I mean, you don't have to give numbers if you don't want to, but would you say your retention rate is very high?
Yeah, I mean, we score out depending on the year and depending on, these other different factors, probably about 93%.
Wow.
Yeah.
That's really good.
Yep.
So on average, you'll lose around 7%.
Yeah.
And then is it usually kind of like this guy that you'll bring back the 7% in new business?
Well, the
Do you
hope
usually
is you
go
get
a
more.
little bit more than that.
Yeah. So you have a growth number, if we're growing at 12%, right? We're going to take that 7 and, be on top of that.
How about the last few years in the hard market that we've been in for insurance? What's it been like? Has retention been harder to keep?
Yeah. So it's kind of been steady. Despite the increases, and more so only because it's more difficult to place a risk, like in other years, you'd have a carrier that had like a takeaway rate, right? So they're super aggressive on rate,
right?
And they're taking market share and growing that way. In the last couple of years, everybody's kind of maintained that steady position of we're all taking rate.
Right. It's like no matter who you're with, your bill's going to go up.
So a lot of our conversations are, yes, and we talk to everybody. I mean, every day we have these conversations as to, hey, looking at the renewal, review the renewal. This policy is up 11% and this one's up 13%, right? But when I look at these other 8 companies, there's nothing better out here. You're still in a good position premium-wise. And then it comes down to carrier service, claims, and all that. But just being in and around the premium number, we find that that's what's happening in most cases. And so on top of that, the difficulty to place new insurance, right? So part of the conversation of a review on the current existing account, hey, when's the last time you did your roof, right? And if they're like, I did it probably 20 years ago. Well, that's going to change the way that we decide to go forward with a new carrier.
Gotcha.
So with all of those factors in play, it's kind of been a steady pace where we're not seeing on a different year, you'd see a dramatic decrease in retention.
Yep.
But just by the way of the industry is right now, it's kind of maintained at, level 90, 91, 93%, something like that.
Nice. One thing you had said on a previous episode was you were talking about how having an insurance brokerage, so you have multiple carriers between property, auto and life, call it like 50 or so.
Right.
That's been a leg up for you in this market because if someone is at one of the big box shops we mentioned before and they just drop them or say it's going up by 20, 30% no matter what.
Yeah.
What's that been like for adding to your book of business? Like, are you finding that when you get most of those calls, you can either A, help them or B, get the number a little bit lower or both?
So just imagine the scenario where you are with an agency that only writes with one carrier.
Mm-hmm.
Like, here, like take it or leave it. This is your
this
policy.
Is what we have.
This is it, right? So that's going to dictate to that client, how they kind of respond or decide to, stay or leave. With us, we get a lot of clients that, reach out to us first, right? Because it's a relationship, because we've provided a good level of customer service. There's a good relationship with the client. They trust us. And so we have a lot of people that, often reach out, hey, renewal's coming. I saw it. Can you take a look at it? Like, is this, within the norm of what you're seeing?
Yeah.
And so we have the ability to then take that and then look at the market of 10 other companies, right? So they don't need to go out and call.
They don't need to make 10 phone calls.
Right. So it's
Interesting.
definitely a leg up of dealing with clients at the renewal time, because we can kind of gauge and survey and kind of get an understanding of what the market is for that client, given all of their circumstances. And even too, we have some clients that, maybe had a claim, 2 years ago.
Yep.
And then we can kind of see, that claim's going to be falling off in a year from now. Like, let's not do anything right now because your position's going to greatly improve, 9 months from now.
Interesting.
So it's just having these conversations with the client and kind of really going back to the point of we're really trying to put them in the best position possible, and maybe that is waiting.
I'm assuming in this hard market, because it's still a hard market around here, is a lot of your time filled with just the retention-based calls?
Yeah.
Like someone's worried about their monthly payment going up or their annual payment going up, or, that I got a letter, they want to like check out my roof or my walkway or something like that. So,
and we're getting non-renewals, and we get renewal inspection letters.
Explain what a non-renewal is.
So you had 2 accidents in the last year,
and they just say, we're done with you.
as you know.
As I know.
The carrier can decide.
Sean, we have a problem here.
Again.
I know this was a couple months ago, but same thing. What do I do?
Although yours went down this year. I don't know if you caught that.
That's because I'm the man now. I'm not doing it anymore.
Bigly.
Yeah.
So, what were you saying?
So saying like keeping those people, retaining those clients, I'm sure you're getting like a ton of calls just to explain and or redirect the client from this carrier to that carrier, understand why things are the way they are.
It's a lot of time. It's for sure. We could probably hire someone into the office and just have them work on renewals. Like,
wow, that's a full-time job.
Yeah. The one thing we did find, we were able to work with our vendors to kind of shorten up the process. So we integrated our AMS system, which is our data bank, our housing of our existing clients, and kind of connected our rating platform.
Okay.
So when we run it through, so what we did was we were able to kind of like create a shortcut. Because of the volume, we needed to find a better way to do it.
Right.
Find some efficiencies in this. So we are able to take the information, send it through, and get a pretty quick idea of like where those numbers are falling.
Interesting. So it almost like analyzes or dissects that person's policy.
Yep. It takes their information, all the drivers, all the vehicles, all the cars, and then kind of floods over to our rating platform. Wow. So that we're able to get a really quick snapshot. It's not going to be exact, but I don't need to be exact.
No, you just need to understand it without having to spend like a half hour reading and,
So what's the trend, right? So like, is it a trend that there's something else that's dramatic out there, or is it more, or is it kind of like in line with everything else?
Gotcha.
So we were able to do that, and we're looking now to try to even just do it even quicker and faster. We got a demo with a company next week that's kind of an
AI.
Yeah.
Of course.
Yep.
Mr. AI over here.
That I think can even make it quicker, where we can just have that client go to the link, fill out some information.
Does the hand come out of the laptop screen right now and say, "Hi, Sean. nice to meet you. You're like, pleasure to meet you, Mr. AI.
Yeah.
You're like, it's Mrs. AI.
It's exactly.
Get it straight.
Exactly.
That's what happened. That's where AI has come now.
Yep. Actually, it's me on a hologram with my hand shaking.
You're the hologram.
Yeah.
And then their hologram comes out the laptop screen.
Yeah. So we're constantly, right, just where everything's headed and going is trying to find more efficiencies, because I think that's the, lending better customer service.
Yep.
For clients. So if we can do that, that's what we're working towards.
All right. Well, let's do this. Let's go over our tips for listeners and watchers.
Yep.
We had 3. Wonder why we have 3.
Don't know. Tim thing or something.
All right. Let's talk about some of the tips you have to improve retention.
So this would be for agencies out there.
Yep.
Right. Maybe it's this guy.
Big box or independent, doesn't matter.
This agent where we pulled this from. Just tips on maybe some strategies that you can work on to maybe go from an 80 to an 85 or 85 to a 90. But I think in that scenario that we kind of talked about in the beginning, it was ultimately it's that agency that's really just sales driven, right? Their focus is really just sales. Sell. And so for the new agents out there that have that mindset, I would either tell them or advise them to maybe steer away from that. Not completely.
Maybe sell, retain, sell, or sell, retain.
Or just spend money, right? I don't know how much money you're spending on marketing, but take some of that marketing budget and go hire someone to come in that can help you with supporting your existing clients. Because if you have another person on the boat that's helping with the agency customer service, that is going to directly impact your retention number.
Interesting.
So that would be, if I had one.
Communicate.
Well, that's the first tip.
We're getting ahead of ourselves, folks.
Staffing, right? You got to have someone in there. And Trudy in our office does an amazing job with our clients. She always gets people saying, or to me, Trudy's great. She does a great job. Yep. She's always following up. She explains it in a way that I can understand. So go get yourself a Trudy if you're looking to improve your retention.
Go to the Trudy store, pick one out, and that way your clients will say, what a lovely Trudy you have.
Exactly.
Pretty
Outside
simple.
of that, number 1 is communication. Communicate with your clients how they want to be communicated to.
Right. You had said that because it's almost like you say communicate with your clients. Some people are like, just pick up the phone, call all your clients, or like, just go to your laptop, email all your clients, or text all. You made the example of the way they want to be communicated.
Correct.
Some people want a call.
Correct.
Some people want an email.
Correct.
Some people want like a text or a letter, whatever. It just depends on the person.
Yeah.
That's good advice.
It's going to make a dramatic impact on the way that client perceives your agency. There's some people out there that are text only, right?
Yeah.
And if you're not able to meet them there, then they're more inclined to leave because you're not meeting them the way that they want to be communicated to.
Yeah. All your emails went to spam, Sean. I don't really check my email
I don't
that
check
much.
my email. I mean, how many people do you know? Like, oh, you left me a voicemail? I don't even.
Oh gosh, that's like the number 1 today. It's like you leave someone a voicemail, you're like,
forget it.
They're not getting it.
Right.
I do it to just be polite.
Right.
But then people are like, you left me a voicemail? I'm like, why did I even do that?
So
like they almost prefer that I don't.
That's a great example of meeting your client where they need to be met.
Good advice.
Number 2, give your clients the tools to win.
What's a tool?
A tool can be really anything. I'll give one example as to an online account. We get clients calling, hey, can I get access to my stuff online? You sure can. Here, I'll send you the link, registration, boom, have it over, right? Or paperless policy renewal documents.
I mean, tool could also be a band.
Tool could be a band.
And tool could also be like a jabroni. Like that guy's a real tool.
Yeah.
We say in Philly sometimes people say jabroni. What a jabroni, that dude.
We'll stick to like
Okay, an actual tool.
a tool, a service for your client that will improve the relationship, reduce the friction between you and your client. You know, find something that will enhance their opinion of your agency, right?
What would be like an example? So if you're like, hey, someone needs a tool to make the experience that much better, what would be an example of something that like your brokerage or like one of your carriers could offer to make their life easier?
Yeah. So there's, I would say one out there would be an application like a glove box, right? That's a company that has built an agent to client app. So you get them signed up, and that's a tool that you can use to have your client get that access online.
Like get an insurance card,
Yep.
look at coverage,
Look at billings. Oh, did I pay
statements.
this? How's my billing set up? Something like that.
How come I don't have glove box?
Because I don't use it.
Oh, okay.
But I'm just giving an example.
You're like, it's good.
It's
But
good.
I don't.
It's good if you want
I don't
that.
use it.
Well, for me, the drawback is I'm not gonna get in trouble here, but
Yeah.
the drawback is once you're in, right?
Gotcha.
And so I've done it before where you've had the app, but then they change the
you've,
way
like,
it's
tested
done. They change the way it's done. Now you have to change your whole. You kind of have to follow what they're doing.
Oh, so now they're telling you how to like run your back end a little
yeah.
bit. Oh, yeah, that doesn't
So-
sound like fun.
So it can be good. And if you're an agency that's looking for that, it could be a tool that you use to enhance the client experience.
Okay.
Just an example.
What's number 3?
Number 3, responsiveness. Responsiveness to your clients lends itself to customer service, right? So the better that you can respond to questions, changes, anything that happens on a day-to-day basis with your clients, being responsive is going to improve the level of customer service, which is going to directly translate to a better retention rate.
Awesome.
And that can be, going back to the example of hiring another person
Yep.
for staff, that's just solely there for client customer service.
How common are VAs, virtual assistants, in your world?
Very, very common.
Are they more common than having, let's say, like an actual like person in your office?
No.
You say it's like
No, but
20% of agencies might have a VA kind of thing.
I would say it would be higher.
Okay.
I'd probably look it up. We'd probably get a number, at least an average or something. But I would say if I had to guess, well, maybe I'll draw back on that number. Just thinking of agencies, and most agencies are older. I would say it's north of 25%,
Oh, wow.
if I had to guess.
Quarter to a third use VAs.
And there's a lot of firms out there. There's a lot of firms that will get you placement through their firm, like we did.
Yeah.
We did it for a period of time.
You had VAs.
Yep. And it worked really good. But then it didn't. So then, change. But very common, and, some are better than others. But it really depends on who that person is, who that VA is.
Yeah.
Right. But some do a great job. Some people love theirs, Yeah.
All right.
Pretty common.
Why don't you shut this one down?
All right, folks. Thanks for sticking with us. If you want to reach out to the show, get us on the email bricksandrisk@gmail.com. You can leave a review for us on Spotify or Apple, and sometimes we read them on the shows.
We'd love to read them on the show.
Social media, you can find us on Instagram, Facebook. We're on YouTube, and we're at a great community in LinkedIn that is continuing to grow. Find us there. That's it.
All right. That's all we have for this one, folks. Thank you for tuning in again to another episode of Bricks and Risk. See you next week.
Thank you for joining us on another episode of Bricks and Risk. Our goal is that you walk away with 1 or 2 valuable nuggets, and we greatly appreciate you sharing your time with us today. You can find all B&R episodes on Spotify, Apple Music, YouTube, and anywhere else you get your podcast content. Until next time, keep learning, and keep growing.